Okay, so the stock market is in deep red today, yet data storage stocks are just beginning to break their 10-day moving average. And I say just because if you look at WDC, which I have on my screen here, and also take a look at SNDK, we can see that they're just barely pulling back into their 10-day. Yet, if we take a look at the stock market, say the S&P 500, we are below our 10 and 20-day moving averages and pulling back into what I'm sure a lot of people are hoping acts as support on this level right here. Will it hold as support? Oh, it's tough to say because we have been bouncing into resistance very, very frequently. And the QQQs has even been a little bit more sideways, you can say, as we have a whole bunch of tops here. 1, 2, 3, 4, 5, 6 knocks into resistance, and now we are below the moving averages here on the daily chart. So the blue line is the 21-day and the 10 line is the 10-day, and the 10-day is accelerating. That's the market, and we can also take a look at some of the leading ETFs because it is melting. We can see that we have constant lower highs starting from about back here, and for the most part you can say that buyers haven't had a chance because any sort of push to the upside was just simply met with more selling very quickly. We just have constant higher lows, and higher lows. And I mean, what a beautiful trend to the downside with the moving averages, because the pullbacks, they line up quite nicely and perfectly, and we get a perfect bounce into a key moving average level. And with the continuation, you're also getting a massive amount of volume coming into the downside. So could this be a sign of capitulation? It can be, we do not know, but it is showing the signs. However, people are pretty bearish on software because you could pretty much vibe code anything these days, and that is not a good look for software. This is cloud as well, and it's pulling back as well. We have a downtrend, and same thing, you could see that we're making lower highs, and same thing with the lows. We're making lower lows, and again breaking the downtrend, but also respecting the moving averages, which goes to show pullbacks into moving averages are just a great key level to capture multi-day moves at the beginning of a swing, whether that's to the upside or the downside. Even semiconductors are pulling back, but the move isn't as dire as the software sector, and quantum as well is pulling back. Again, not as dire as the software sector, but you can see we're pulling in quite a bit. We are below our moving averages. We can also go ahead and take a look at some of the quantum names here and see how they are performing, and of course they will be below their moving averages on the daily chart. QUBT is making lower lows, QBTS is making lower lows as well, and it is kind of pulling in with momentum because you're not really getting much of a pullback into the moving averages since about this level here. So this has all just been momentum from the beginning of the swing with the moving averages, and the tight areas, that's not what I meant to do, but with the tight areas, what you can see is that once price comes out of the tight areas with the moving averages, where you can see the price action getting tight, and even with an inside day as well, what you will get is a strong move coming out of the moving average, and then they begin to expand. So that's looking pretty good if you were short, just as you would go long. It's really just the same thing as going long, but flipped the opposite way. A tightness inside day, a push to the downside, with the general market on your side as a whole in terms of the bears officially now being in control. It's just that the bears can't seem to get a foothold on the data storage stocks because as you can see here, we're pretty much tracking relative strength, and you can see the pullback into the 10 EMA. We haven't broken the 10. We haven't haven't broken the 20. We aren't making lower lows. We aren't making higher lows. And all in all, this kind of just simply looks like a necessary pullback in a really strong stock. And same thing going with MU. It's pulling back. It's now pulling back into its 10. But look at this. We're getting an inside day already. Pretty much all stocks were down today, and MU decided that it wanted to be up today. It put in an inside day, pretty much shrugging off the really big down day that we had just across the board. And that just simply tells us there are buyers here at the 20-day that are already itching to step up and refuse to let this thing pull back any further. WDC, for the most part, holding its 10-day and not yet at its 20-day. All in all, these stocks are really, really strong. And a large part of that is due to AI not being really able to move forward without them, and the fact that institutions need to get into these names. This is by far the strongest sector in the market right now, especially when some of the previous strong names that were doing extremely well, for example, silver and gold, which just had a really parabolic move to the upside and just absolutely dumping, just a really big move to the downside. Let's just see what that looks like from the top here, and almost a 40% down move from the highs, and that's major. And it's probably going to be something very similar with gold as well. At the same time, we have data center storage names holding up quite well. So keep those on your radar, because once the move is ready to continue and the market decides that, hey, it's going to stop pulling back, because fun fact, the market actually goes up about 80% of the time, and look at this uptrend. So don't be discouraged by a little bit of volatility. This is simply how market cycles work. We simply now need to wait for the pullback to happen and be prepared. So the stance right now is cautiously defensive. This market environment definitely favors shorts, or just simply staying out of the market and going to the beach, maybe if there is one where you live, and keeping an eye on the turn. There's a few other sectors that we do need to keep very close eyes on, like aluminum and solar. Aerospace and defense is really at the top of the list. They do have a lot of good names, and we even had some that were up today. It was a really bad day today, and the really strong sectors do provide hints. So we'll be taking a look at those. So go ahead and hit the subscribe button, and also hit the like button as well if you want to see more of what's leading out there. And I will catch you in the next one. Peace.